Today we're going to be talking about income streams as low as $35,000 all the way up to $100,000, and I'm going to let you know how much you're going to qualify for if you are in that bracket, as well as what your expenses are going to be overall and how much it's going to cost you per month. So let's get right into it. First and foremost, I got to ask the question, why buy real estate? It's an absolutely huge question because there's a ton of information online right now about different types of investors out there talking about why not to buy real estate and why real estate's a bad investment. I think it's a great investment and it actually creates more millionaires than anything else out there. So, why buy real estate? Number one, it's going to be to save money for your future. So, right now, there's a lot of talk about what's happening with inflation. And one way to protect yourself from inflation is to buy real estate because the value of real estate is going to go up with inflation. So that's one of the major reasons to buy real estate. Second of all is so you don't have to pay a landlord anymore. Instead of paying a landlord, start to pay yourself. You need to create a nest egg for your future. So like a lot of us, including myself, I'm not great at saving. You get better over time, but some people just aren't great at saving. One fantastic way to save for your future is to buy real estate. And it's the number one saving source that I use to make more money. And finally, to help your kids get into the future market. So, like I was saying about that thing I was telling you about inflation, inflation is the value of money decreasing over time. So, right now, property prices are going up is what I find in different marketplaces. And it's going to be really hard for a young person to get into the real estate market and own a home for themselves. So, one way to protect your children is to buy a property for them now so that they have an easy access to get into the market, or at least buy a property for yourself. Then you'll have some money to give them for a down payment so that they can purchase a property in the future. How to buy real estate. I've done a whole bunch of videos on how to buy real estate, how to get a mortgage, that type of thing. Just follow the links through the channel and you'll be able to get to those videos. But number one thing I suggest people to do is get pre-approved for your mortgage first. And I can help you do that. I'm a mortgage broker. So give me a call anytime if you need that assistance. But get approved for your mortgage first so you know exactly how much you qualify for. That way, when you're shopping, you will have no problem getting approved going forward. You're not going to get excited about something that you can't afford or get your family excited about something they can't afford. So make sure you get pre-approved for that mortgage. Number two, find a kick-ass realtor. You need a real estate agent that knows what they're doing, that are going to negotiate hard for you. Because if you don't have this, then you're going to be paying premium pricing for the property that you're going to purchase right now. And you need to avoid that at all costs. Number one thing about buying real estate is getting in cheap. Choose your property type based on the area you want to live in. So you got lots of things to think about here. If you're single, you're going to want maybe some entertainment, maybe a gym, grocery stores nearby, maybe your job close by as well. If you are a family, you're going to want location to schools, grocery, child activities, and then also your commute to work is under consideration as well. Here's how much you qualify for if you have an income of $35,000 per year. This is based on no debt. So all of the numbers we're going to go through today does not include your student loan, does not include your car payments and your liabilities. So if you have those kind of payments, make sure you reach out to me so I can factor that in and tell you how much you're pre-approved for exactly. So first of all, you have to put a 5% down payment. So at 35,000, you qualify for a mortgage on a property value. That's the property value is 125,000. You have to put 5% down from your own pocket in order to qualify for this mortgage. If you don't have it, call me because we do have other programs where we can do zero down, also called flex down. So the 5% out of your pocket is $6,250. After that, I'm basing this on a 5% interest rate just because interest rate fluctuates kind of around that range all the time right now. Property taxes, we're going to include all of your payments in to these calculations. So first, your mortgage payment on 125,000 with 5% down is $718.29. Okay. Next is property taxes. Would be approximately 1% of the purchase price, so $1,250 if you're approved for 125,000. So the property taxes on this work out to 104,000 a month. Then you have heat and water, approximately $150 a month, electricity, approximately $100 a month, insurance is going to be another $100 a month. Your internet is about $60 a month, and then your TV or Netflix or whatever you use is going to be about another $20 a month. So all in all, your purchasing this house is going to cost you $1,252.45. Okay. I think most people can afford that kind of payment, and it's a lot cheaper than rent in most municipalities. Our next category is a very common category. This is $50,000 in income per year. A lot of people are, I think the highest amount of people are probably in this category where you earn $50,000 a year, single person in a household. Again, we're basing this on you having no debt and putting 5% down on a mortgage. With $50,000, the maximum you qualify for with a $50,000 income is $200,000. So the purchase price of the property is $200,000. Your down payment on this would be $10,000. Okay, that is the amount down, minimum amount down that you have to put down. So let's go through the expenses of this. Again, it's based on 5% interest rate, fixed term interest rate. So if you want a variable, I can run those scenarios for you again, but just call me if you have any questions. Number one, your mortgage payment would be $1,149.26 per month. After that, you have property taxes of $167 a month, heat and water at $150 per month, electricity, $100 per month, insurance, another $100 per month, internet, $60 per month, and TV and Netflix, approximately $20 a month. So your grand total is $1,746 a month total expenses for your home if you're purchasing a property for $200,000. The next category is the $75,000 income category, and a lot of people are in this category as well. So if you earn $75,000, the maximum amount that I can pre-approve you today is $310,000. Again, that's based on 5% down, which comes to a total of $15,500 as a down payment for this type of property. Again, we're basing our scenario on 5% interest rates. So your monthly mortgage payments are going to be $1,781.34. Okay. Next, your property taxes are $258, heat and water $150, electricity $100, insurance $100, internet $60, and Netflix, TV, whatever streaming service you use, approximately $20 a month. So your grand total after this for total household expenses for your property comes to $2,469.66. Our next category is another common category, and that's six figures. That's if you're making $100,000 a year. So if you're making $100,000 a year, the mortgage that you qualify for, or the total purchase price of the property you qualify for, is $425,000. So again, based on zero debt, 5% down payment. So let's go through the numbers. Number one is your mortgage payments. Your mortgage payments on this will be $2,442.15 per month. Next, property taxes, $354 a month. Heat and water, $150 a month. Electricity is going to be $100 a month. Insurance is going to be $100 a month. Your internet service is about $60 a month. And then your Netflix or your TV streaming service, $20 a month. So your grand total for this is $3,226.31 total expenses per month. And finally, the last figure that I'm going to go over with you today is the $125,000 income category. Now, this is stretching it for a lot of people, but household income could be 125 grand easily with a husband and wife both working. So I want to give you this number as well. I'm going to be doing another video with the higher income categories, 150,000 all the way up to $350,000 income in a future video. But for now, right now, your $125,000 income would qualify you for a property value up to $525,000. So let's go through the numbers. Again, 5% down, 5% interest rate, and your total mortgage payments would be $3,009 per month. Your property taxes are $437 per month. Your heat and water is $150 a month. Electricity is $100 per month. Your insurance is $100 per month. Your internet is $60 per month. And then your TV and Netflix is $20 per month. So your total here is $3,876.73 is your total household expenses if you make $125,000. I hope you liked the video. Please like and subscribe to the channel for more awesome financial advice. I look forward to helping you soon. And call me if you have any mortgage related questions. I'm the easiest way to get approved for a mortgage. Thanks.